Hey guys, a very good morning, Fabio here, and welcome to a new daily market outlook. So a new week is about to start. So let's dive into the market, see what is going on, and yeah, let's just see what the major dollar pairs alongside gold and the dollar index are going to be doing. So guys, on Friday we had NFP and the news was a bit negative for the US dollar, hence why we saw this major sell-off back down. However, this major sell-off is no coincidence, at least to where it happened, because as we can see, we are just simply reacting to this area of demand. So demand has now been taken out, as we can see after that first tap. Initial orders were taken out, and once you dump back down into demand for the second time, we can clearly see that there are less orders within the market and therefore a less large of a reaction, or better said, a deeper reaction from a lower level. So what can we expect? Well, for me, the dollar index is still bullish on the 4-hour internal structure wise, because as we know, this is still your swing low, this is still your swing high. Over here we had, of course, the trend line push up. This is now your swing high, this is now your swing low. Everything inside is just a retracement. So for now, this area of pretty much demand, which of course has now been taken out, is still pushing price up higher. So for now, I'm just going to be targeting these levels of minor supply. These should be reaction levels within the market. Structure wise, we should be moving up higher, backed up in towards at least this area of supply. But for now, I'm just going to be waiting for the dollar index to push up a little bit higher, kind of give us a reaction to this imbalance over here and see if that can cause price to push further. If we can break that, then I'm definitely looking at this area of supply. So yeah, a little bit of a tricky market DXY wise, just purely because of this massive area of consolidation. So I'm also not going to be focusing too heavily on the dollar index this week, most likely, until we break out of that range. So yeah, let's head over to Aussie dollar. Okay guys, so Aussie dollar, beautiful price action of course last week, as we all know. And what is currently happening? So for me personally, Aussie dollar is bearish, as we can see, a bearish break of structure once again over here. So we had our first impulse down, pullback, third impulse down. Of course, we created liquidity underneath this low, which I mentioned on, I think it was Friday. We took out the low, and after that, essentially, we've been reversing. Also in the live session, I mentioned that I was at least wanting to see this swing high get taken out. Well, that has now happened, and we are starting to push up higher. So where are we currently moving towards? Well, we have kind of two areas to watch out for. That is, of course, the extreme area of supply all the way at the top. But we also have some supply located inside this imbalance candle over here, from where we could also, or can also, expect a reaction. So yeah, for now, just waiting for Aussie dollar to push up a little bit higher, and after that, I will be looking at the lower time frame for potential entries. Why? Well, because the weekly is bearish, the daily is bearish, and the 4-hour is also bearish. So therefore, shorts will always hold my preference. And on the daily time frame, we've also hit the EQ of the swing range. So what do I mean with the EQ? I mean the equilibrium, the 0.5 Fibonacci level essentially. And if I just move that onto my screen over here, you can clearly see that that is this blue line located over here in the middle of this bearish leg. So yeah, that's essentially what I'm waiting for. And yeah, let's just wait and see, guys. So yeah, that's for now what I'm waiting. And let's head over to euro dollar. So euro dollar, guys, euro dollar is currently hitting supply, as we can clearly see, and reacting to it. So for now, just waiting for it to pull back in towards this demand before looking for some potential longs back up higher. So we're going to see if demand can hold, because this is essentially your demand chain. This was demand, orders filled. This is now demand, and now we're going to see if orders are once again going to be filled. However, we have to keep in mind that this is just a straight push up. And remember what I explained last week multiple times, there is no inducement, there's no liquidation. So if we see that first tap in towards the zone, we can see a reaction, but I'm definitely going to be waiting for that second tap, liquidate the stops, and only then will I be looking to push price once again higher. We do, of course, have to bear in mind that these are weak lows. Why these weak lows? Of course, this area of demand took out this high. However, this high also didn't achieve anything. So this is all just internal structure. It would have been much more powerful if this area of demand would have taken out this high. So this high is just, or this, area of demand is simply just an area of demand with no inducement, no liquidation, and it also hasn't really taken out a strong high. So this high over here. So this could just all be kind of fake price action for us to essentially move back down in towards this area of extreme demand. However, guys, I'm just going to be waiting and seeing what the lower time frame does once we reach in towards this area of demand. If we see clear liquidation, 50-minute change in characters, then I will be looking for those potential longs on the lower time frame within this area of demand, because we cannot deny it. It did take out this internal structure high, which does mean at least something. However, just keep in mind that it is not a very strong area of demand, and the preference we hold is still this extreme area of demand. So yeah, that's euro dollar. Let's head over to pound dollar. And pound dollar, guys. So pound dollar has been moving higher as expected since last week. Still very messy price action. Not really interested in this pair at all. Still just aiming for this swing high at least to get taken out. The black line at 1.36077. I'm just waiting for that to be liquidated and essentially a push up a little bit higher in towards this area of daily demand. And then looking at the 4 hour, of course, what we can then expect potentially is kind of to hit this, let's say, imbalance all the way at the extreme for sure. So yeah, I'm just going to be waiting and seeing what's going to be happening once we move in towards this area of supply. And from there, I'll just react and adapt. But yeah, pound dollar is not very clean structure-wise, so hence doesn't really hold my focus, such as Aussie dollar or Kiwi dollar. So yeah, that's pound dollar. Let's over to Kiwi dollar. And Kiwi dollar, guys. So Kiwi dollar structure-wise is pretty clean. If we look at the daily real quick, what we can clearly see on the daily, however, is that those preferable areas of supply and the preferable levels to trade from are still a little bit higher. So just quickly putting in the premium versus discount tool, we can clearly see that the 0.5 FIB and essentially the premium of the range is still higher. So essentially you would want Kiwi dollar to push up higher before looking for those higher probability sells. However, if we go in towards the 4 hour time frame, we clearly see that supply is currently in control and we have this bearish order flow, right? So for now, I'm just going to be looking for those sells. Why? Because the daily is bearish and the 4 hour is bearish. So we do have structure alignment. So now what we have to wait for, essentially just for supply to get hit. So of course we have this beautiful area of supply all the way at the extreme of this leg down. But we also have some supply where we are currently located, hence why price is currently slowing down. This is the 50% body candle, which essentially kind of caused this area of demand to break. But we know this is not a very strong area of demand, but it did take out this area of demand. So this is your takeout zone, which took out this area of demand. So therefore, this zone does hold some strength. So we could start seeing a push back down from here. Also, if we just quickly use the premium versus discount tool, we can see that we just missed out on the 0.5 mark. So yeah, we could still move up higher in my opinion. But I'm just going to be keeping an eye on the lower time frame. For now, the 15-minute is still, let me see, still bullish. Or wait, by the way, no, 15-minute seems bearish now with leg up, leg down, leg up, leg down. Then we get a close below. This then becomes your swing high essentially. So we're still inside this bearish range for now. So let's see if we can break above this high over here, see close above. Then we can expect further upside into, for instance, this area of supply over here. This is a very nice area of supply, which I would love to see get hit on Kiwi dollar. But yeah, for now, 15-minute is bearish, but let's see if we can close above this wick and move in towards, let's say, this area of supply over here. Potentially even move up higher, but for now, that is kind of what I'm watching for sure, yeah. So yeah, let's just wait for that. Preferably, of course, you always want to hit the extreme supply, which is this one. So yeah, I'm just going to be keeping an eye on the 15-minute time frame, as I said. Either hit that area of supply over here, potentially look for shorts if we see a change in structure, and yeah, essentially look for higher probability shorts from this highest area of supply. So yeah, that is Kiwi dollar. Let's head over to gold. So yeah, look, gold was a beautiful, beautiful setup on Friday. As we mentioned during the live stream, we saw liquidation of the stop losses below this low over here. After that, we saw a straight reversal back up, of course, with that negative US data. For now, what is happening? Well, gold and the dollar, of course, both have been consolidating for quite a while now. As we can see in the lower time frame, gold is pretty messy. What is beautiful, however, is that we have moved in towards this supply zone, which I mentioned on Friday, to the absolute pip, it seems, and we are reacting to it at the moment. Not a very big fan of the overall lower time frame, or of course the 4 hour as well. Why? Well, because it's kind of indecisive for me personally. There are two things going on. Of course, we saw a candle close below this low. However, we can see that there's not a lot of momentum in towards the downside. Straight away, once we see that candle close below, we kind of get that retracement. We see a liquidation over here, which essentially is more of a bullish sign. And straight away, we see kind of that push up again. So I'm not going to be surprised if we do see higher levels on gold before potentially heading down lower in towards 1772, because this is still a very strong area of 4 hour demand. It still holds my preference to go long from this zone if we do reach it. But yeah, I'm not personally trading gold. My main focus for now is on Kiwi dollar and Aussie dollar. So yeah guys, that is it for today. Thank you so much for tuning in. As per usual, if you have any questions whatsoever, feel free to reach out to me through Discord. Link is in the description down below. Thanks guys.